What is up, crew? In this video today, I am going to go over how I spent about $820 in new stocks and new positions in my Robinhood investment portfolio in the month of April. So you guys, without further ado, let's just get into this video. What is up, you guys? Welcome back to my channel. If you are new here, what is going on? My name is Nikki and it would mean the absolute world to me if you would consider subscribing by hitting the NB on the bottom corner or the red subscribe button and join my journey. On this channel, I post 2 times a week documenting my steps along the way and my journey of life, ranging from finances to faith to sexuality to just life and the journey that we all go through. I believe that everybody is on a journey and everybody's journey is worth sharing. So if any of that interests you, or if you just enjoy hanging out with me half as much as I love hanging out with all y'all, please consider hitting that red subscribe button. Let's grow together and let's go on this journey together. Alright, that's enough fluff. Let's just get into the portfolio, you guys. Alright, you guys, so if you have watched my entire Robinhood portfolio video already, you pretty much already know what my standings were before this video. If you have not watched that video and you want more details about my overall portfolio, go ahead and click this link up here that I will put there. If you don't want to watch it right now, if you want to wait till the end, you can wait to the end of this video. I'll link it in the box below. It goes way into more depth about every position I have, because in this video, I'm just going over my additions. Here's the deal, and here's my little 2 cents, and I'm really not going to talk about it much more after that, but I think some states may possibly be opening things a little bit too early. We do have good news right now, which I think is what's making this stock market go up, but I think in a few weeks, depending on how everything goes, it could be a little bit of a disaster. I'm not 100% sure, and like I say, you guys, always in these videos, never take my financial advice. I am not a professional. I'm just a chick on YouTube who documents what she loves, and this is part of what I love, and that's really it. Here is my portfolio. Like I said, about $5,300, a little less, but these I will show you slowly are all of my positions and holdings. I spent a good amount of time getting all of my additions and new things and how much I paid, how it all averaged out, and I'm actually pretty excited. And to be honest with you, when you are investing in the stock market long term, and the whole idea is to consistently and consecutively place money into your portfolio so it has more time to grow, sometimes, just sometimes, you can forget actually how much you put in it. Like, did I ever intend to put $820 in there this month when I got furloughed from my job? No. But did I? Because I had money? Yes. I don't know, really. That's kind of crazy to me, but looking back at everything, realizing that like there were some really great opportunities to buy into some awesome companies at awesome discounts, I couldn't pass it up. So that's probably why that number is a little bit higher than I really want it to be. And I am gonna go into why I added more of these, but not too much. I'm really just gonna go into the new ones as to why I grabbed those more than I am just adding it to positions that I already have, because if you already own something and it goes on sale and you like that something, you should probably go back and buy more. So there's really not much to say about that, but let me just shut the hell up and get into this. All right, y'all, so the first one that I added more was new residential investment, ticker NRZ. You might ask why, and to be honest with you, I was trying to dollar cost average my way down. I now have 25 shares, which, I'm gonna look at my notes, which is 10 shares more than I had in the original video that I posted. So I did end up buying 5 shares at $6.25 and 5 shares at $3.06, because my average before that was like $15. So as you can see here, I've managed to get my average cost down to about $8.48. So I do like that. Right here, the dividend is 3.42. I've been getting paid. I have a pending one coming in May, so I'm not too worried about it. Right there, you can see the additions that I did buy. You know, it's a real estate REIT. It's basically allowing you to invest in real estate that you don't have to pay for, you know, large sums of money for down payments or whatever. I really enjoy that, but like I said, I was dollar costing my way down. I'm getting paid those dividends. Nothing has happened with those dividends, so I was totally comfortable adding more. So the total of that addition came out to $46.55 for those 10 shares that I added. So the next added position here that I grabbed was in Comcast. Now I added 2 shares at $32.70 for a total of $65.40. So it brought my average down to $41.77, and before that it was around $44. So now I have 8 shares. They do pay a dividend here of 2.58%. I got paid early April, so not concerned about it at adding more to get more dividend, to get more passive income. I like Comcast, especially now. I notice everything obviously is gonna be streaming, online, things like that. Comcast is a great place to be for that. I'm not concerned about it too much. That's why I went ahead and I added 2 more shares. So those additions in Comcast added $65.40 for the total for the 2 new shares. So the next addition into a position that I already had is going to be in AT&T. So that is ticker T, and I did buy 4 more shares. So I bought 2 shares at $29.29 and I bought 2 shares at $27.88 for a total of $114.34. As you can see here, I am expecting a dividend on May 1st of $5.20 for 10 shares. So that's pretty cool. They pay 52 cents a share. If I go down here, I can see that the dividend right now is at 6.96%. If you watched my video before, you know how I feel about AT&T. I'm not worried. I'm really not. I think they're gonna be fine. I think if they add more streaming and they kind of get up to date, it's just gonna get better. So I'm really not concerned. They have a great dividend payout history. Their growth is pretty good, so not worried about it. It is very hard to pass up. And you let me know down below too if you have AT&T in your portfolio and you can agree with me. But when AT&T hits under 30 bucks, I gotta have some more. I have to have some more of that. If you agree with me, give me the thumbs up, because AT&T under 30, I like it. I like it a lot. So moving down the list here, the next one I want to talk about is Bank of America. I did add onto Bank of America. I added 2 shares. My last video I only had 3. So I added 2 shares at $21.19 for a total cost of $42.38. So, I mean, same gameplay here. I've already invested in it. Look, if you've already bought these stocks and you've already have a position and have equity in it, like if that drops in value, 2 things. If you liked something at 100 bucks, you're probably gonna like it at 80 bucks. And if you're adding to that, you are dollar cost averaging your way down, which is just gonna, in return, when it grows, make you a little bit of extra money. So that's really it. I mean, yes, financials were being talked about as being a little bit risky, but I am looking so long term. Some like Bank of America, I'm not worried about. Bank of America, JP Morgan Chase, those are like my top 2 favorite financials, I think. Well, I like American Express a lot too, but we're just talking about Bank of America right now. I went ahead, I added those 2 shares for a total cost of $42.38. All right, so the next one I'm moving on to is SPYG, which is an ETF. If you guys know, ETFs basically are consistent of a X amount of companies all in one. So when you put your money in there, you're diversifying it across many different sectors usually. So this one is the growth ETF. So I had added 3 shares of this at $34.02, coming out to a total of $102.06. Not mad at that. Look, anytime that I put money into my portfolio, I want to make sure a certain percentage of that is going to ETFs. I mean, long term, you know, you can read articles and stuff, listen to advice from advisors and all that stuff, which you should do your own research and all that jazz. But ETFs are known to be a lower risk. They average the S&P 500. They average the market. Pretty safe idea to put money in there. So there's not a month that I'll invest that I don't invest back to an ETF, kind of balance out my risk, I feel like. But you already know how I feel about risk and stuff. At 26, I am definitely willing to take more in certain areas and with companies that I just like, love, believe in, consume, which I recommend you do as well. But don't listen to me, maybe look into that. But you guys, adding 3 shares of this, totally awesome. We're gonna move on to the next one. So the next one, you guys, is SPYD, the high dividend ETF. I went ahead and added 2 shares of that, 2 at $24.60 for a total of $49.20. Kind of like the other one, you guys. ETFs, I like it. Like I said before, I have a growth ETF, a value ETF, a dividend ETF, and I have one other one. I like another dividend one, but SPYG, SPYD, and SPYV are kind of my favorites. Average cost now of $33.71. I have 6 shares. They do pay a 7.09% dividend, which I think I forgot to mention on the last couples, but you know, we're human, we make mistakes. It's high, but lower risk. I'm confident in it. It follows a lot. It's diversified, and it is the dividend ETF, so it makes sense that the dividends would be high. So you guys look into that one. I'm a huge fan of that. I really do enjoy that one. And let's get into the next one. All right, y'all, so the next one is SPYV. It's the 3rd one of the 3 that I already mentioned. It's the value ETF, which basically it takes growth and dividend and finds them right in the middle, so it's not too heavy on either side, which I really love. All right, so if I pull it up and we look at SPYV, I went ahead and I added only 1 share at $24.48 $24.48 for a total of $24.48. I currently now have 5 shares at an average cost of $31.08. They are paying a 3.06% dividend. If that's something that interests you, I highly recommend you look into that. Maybe pull up the companies that are involved in that specific ETF, see if you like it, see if you support it, and maybe get into it. All right, y'all, so I'm moving on to the other ETF that I had a brain fart about. It's SPHD, which is basically just another high dividend, low volatility type of ETF. So I went ahead and I added 3 shares of this one. This one does pay on monthly dividends, so people like it for that specifically. But I bought 3 shares, so I bought 2 shares at $28.28 and 1 share at $28.25. So I went ahead and added a total of $84.81 into that position, which now sets me at 5 shares, and that pays a 6.01% dividend, which makes sense because it is a dividend focused ETF. And the reason why sometimes I have like 1 share at a certain price and another share at a different price is because I didn't buy them at the same time. So I might have bought one and then I waited a few days and I noticed they went down some more, so then I bought again. And that is solely for the purpose of trying to dollar cost my way down in my position. So if you're wondering why didn't you just buy it all at once, that's the reason why. I like to kind of throw stuff in there because I learned my lesson. And I think that's just a better way to do it, but find what works for you and do what you need to do. All right, everybody, so the next one is one that I have wanted to add positions in because I already own it. So add my stance in it for a while, and I actually did it today. So that is Coca-Cola, y'all. So I went ahead, I added 3 shares of Coca-Cola at a price of $45 flat, and it was crazy. I put that order in at $12.59, and it was a limit order for $45. It was trading at like $45.04 or 6 or something like that, and I put it in at $12.59 for, you know, just for market day, so 1 o'clock, and I was like, oh crap, this isn't gonna go through. And I'm sitting there just staring at it, literally with seconds left to spare. My order filled for 3 shares at 45 flat. Couldn't be more happier. So I went ahead, bought that, adding a total of $135 into that position. As you can see here, I now have 7 shares. They do pay a 3.61% dividend, and you guys, it's Coca-Cola. I mean, in my personal opinion, it is one of the safest independent common stock probably put your money in. I mean, Coca-Cola was Coca-Cola 50 years ago. Coca-Cola is gonna be Coca-Cola 50 years from now. Everybody knows Coca-Cola. I love Coca-Cola. I love DC Diet Coke myself, and I'm very happy to be putting money into this, and I will be continuously putting money into Coca-Cola. You guys, there's really not much to say about that. Do some research on Coke, but just know that it's a great one. Alright, y'all, so the next edition might be a little like, why she do that? What is the point of that? To be honest, the financials aren't super great. They're a little bit above in cash and stuff like that. Their total assets are just slightly above their total liabilities. But I mean, the next one that I went ahead and purchased was Wendy's. And here's the thing, I don't eat fast food. Might not look like that, but I don't really eat fast food. And if I do, Wendy's would probably be the top 3 that I would go to, just because I like the taste of their food better than most fast food. So I went ahead and I bought 2 shares of Wendy's. I bought one at $14.85, and then I bought one at $13.68. So I added just $28.53 to that. As you can see here, they do pay a dividend of 2.78%. You know, here's the thing about Wendy's. So here's the thing about Wendy's. I went to NASDAQ.com. I went to Seeking Alpha. I was looking at their dividend history, their financials. I am a little bit confused because on NASDAQ it said that their payout ratio of their dividend was like 30.8%, which anything under, for me, anything under like 65, 60 is like awesome. Anything between 60 and 80 is like a little bit risky. Anything 80 and over I would pass on, because that's basically the cash that they're making. It's a percent of how much of that they're using to pay their dividends. And on NASDAQ, Wendy's was only paying, like I said, 30.8%. But when I went to Seeking Alpha and I looked at their information, it said Wendy's was at like 118% payout ratio. So I don't know. They do have the last 10 years of dividend growth, which I like. Here's the thing, I like to eat their hamburgers once in a while, okay? And they pay a dividend that has been paid out since at least 2000 from what I could see. It's grown in the last 10 years. In this lockdown, this quarantine, people can still drive through restaurants, get food to go. Wendy's is a fast food restaurant to go. So I believe in it. I like it. I think it's fine. And to be honest with you, I like what they do on Twitter when they kind of banter back and forth with McDonald's. I'm like kind of here for it. I just like Wendy's. I don't know what to say, okay? I like it. So yes, I added it, and to be honest with you, I'll probably add more. Because why not? Because I can. That's really all I had to say about Wendy's. Alright everybody, so this last one I'm going to talk about actually was one I already had when I made my last video. I think I just forgot it. I skipped over it. I don't know. You know, like I said, we're human and we make mistakes. sake. So the next one that I want to talk about that isn't new to April, and I didn't include it in my numbers, but it is just something that I have in my portfolio, is Suncor Energy, which, as you can see on this 1 year, has taken a dump like a lot of companies have. But in a total, I won't go into detail, but in a total I have here, you can see 6 shares at an average cost of $17.54 a share. They do pay an 8.99% dividend, which usually for me is a little high. It's a little risky for me. I don't really know what's gonna happen if they can consecutively and consistently pay me that, because at the time I had no energy sector in my portfolio and I wanted to get diversified a little bit more, so I added them. I haven't really looked at them that much since then, but you know, I do like the average cost of the $17.54, because if you look at a year ago, I mean, we're at 30s, upper 20s, so can't be too mad at that. It just goes up to where it was. We're gonna be fine. I may add some more if it drops. Yeah, that's really all the Suncor Energy. You can look it up. It's SU is the ticker symbol, and you know what, you live and you learn. You gotta do your own research though, so make sure you do your own research. All right, y'all, so the last one is actually one that someone had left in my comments, and they told me I'd really like it and that I needed to look into it. I will put them right here. And they're kind of right. So I went ahead and I did add this. I'm not gonna probably say this right. Is it Raytheon Technologies? Raytheon Technologies? I don't know, come at me, that's fine. But I went ahead, their ticker is RTX. I added them. Now I'm gonna go over a little bit why I added them. I didn't just take his word for it. I went ahead and I looked at the financials, the cash flow, the dividends, all that kind of stuff. But let's just go over this. So I went ahead, I added 2 shares at $63.55 for a total of $127.10. So as you can see right here, they do pay a 4.69% dividend. According to, I use NASDAQ, but according to online and the research that I was doing, they are a company that works with aerospace, defense systems, things like that, things like America and the government and our economy and the United States needs to use. So I felt as though it was a very solid place and company to be. I felt they had, obviously, we have a need for that. And so I did a little bit more deep diving. So I gotta look at my notes here. According to NASDAQ, like I said, the payout ratio for their dividends is only 9.93%, which is kind of crazy. That's awesome if you ask me. That means they're really not spending more than they can, which is awesome. And so I also noticed when I went to pull up the dividend history on this company, it seems as though they only had 1 dividend that was paid out. So I think dividends may be new to this company, and maybe that is why it is 9.93%, which is making me, you know, but I'm okay. I rock with it. I think the basis of the company and what they provide is very necessary, so I'm rocking with it. And I went ahead and looked a little bit further into their PE and PEG ratios, which the PE ratio is a 9.7, which is really awesome. If you don't know what a PE ratio is or a PEG ratio, essentially what a PE ratio is the market value price of the stock over the earnings per share of the company and the stock. Basically anything under, like, I mean, it depends on who you ask. I look for things under like 20, 25 maybe, but basically what it does is it gives you a good indicator of how much of a, I guess a good way to put it is like how much of the deal you're getting. So when I see a PE ratio of 9.77, I'm like, wow, this is like undervalued. This might be a deal. I also went ahead and looked at the PEG ratio, which is essentially the PE ratio over the forecasted growth rate, and you get a certain number. It's kind of the same idea as the PE ratio, so the lower the number, the better. And this PEG ratio is forecasted normally because, you know, analysts and researchers are using a projected growth rate to calculate this. So it's obviously not 100%. You have no one knows what's going to be happening here. But the PEG came out to 1.47, which is like kind of crazy. What? So I went ahead and I grabbed 2. I'll keep an eye on it. I'm gonna do a little bit more research on it, but I kind of like it and I'm kind of into it, so I'll keep it posted obviously if I add any more to my position in this or anything like that. But I just wanted to give you a little rundown. I went over their financials. Their total assets are way higher than their total liabilities, so that makes me comfortable. They are profitable, at least in 2019. You gotta throw the dice a little bit sometimes, okay? You gotta throw the dice, and so I'm throwing the dice. That is RTX for their ticker if you want to look into it. If you invest in in them, let me know down below. Let me know if I'm making a huge mistake or if you like them too. Alright guys, so that is how I spent my $820 for the month of April. If you have any of those, if you have any recommendations of stock companies I should look into, please put them down below. I'm always researching. I'm always wanting to find something new to add. If you found value or entertainment, or if you just enjoyed me, or you just want to thank me for the hard work of editing this video and just posting on YouTube, please give this video a thumbs up. It helps my channel an unreal amount. You guys have no idea. It would mean the absolute world to me if you just smashed that like button. The YouTube algorithm absolutely loves it. And you guys, if you made it to the end of the video and you are not subscribed, please subscribe. Please hit the bell, because I post twice a week with some things that you might want to watch. So y'all, if you made it to the end of the video, you already know you are the real MVP. Come here, you know I love you. And like I say at the end of every single one of my videos, enjoy the journey, whatever your journey is. And always remember to do what sets your hearts on fire. And I will catch y'all in my next video. Alright, bye guys.